Hello friends, this is Martin from Secret the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the markets during the last week and how we can plan for a better trade for the next day. Remember, this is analysis for February 14, Monday 2022. So without wasting time, let's get in the charts. So this is the weekly charts that you see on the Nifty on the left side and the BANKNIFTY on the right side. It's showing a spinning top kind of handle, and it's a small body, so it's indecisive. It is with kind of consolidation because it's coming inside the previous bigger candles. So this BANKNIFTY right side also you see it's kind of a spinning top. It's also kind of a consolidation. Spinning top, normally if it is coming on the top of a trend, it is some implication of a bearishness, but here it is not that the case. Not at the top on both indices, so it should be okay. But there is indecisiveness because of the body size of the candle. And so that's a weekly candle. And the daily candle, if you see, it's kind of a again there is a candle, the bearish candle that is formed on the, it's kind of a hammer, not exactly a hammer because of the body size is a little extra, but the wick size is indicating that there is some bullish support there on the downside. If you bang on the right side, it's showing it's a kind of a spinning body, not a doji, not a hammer, inverted hammer also. So it's kind of a spinning, kind of almost a spinning top again. So again, small body indecisiveness, and main thing to notice that it is at a support zone for the previous resistance. It's coming as a support zone. Here also previous resistance where it broke out from is coming as resistance. So it's kind of a change in polarity. Bounce can happen. So there is possibility that the bounce can happen on the upside. So it did not work out, but there is always a possibility as per the daily charts, right? So that's exactly what is happening. So what was last week? It's almost a 1% of fall, 0.8% of fall that happened in Nifty, 0.5%, 0.7% fall happened on the BANKNIFTY. That's the give up in the last week, and it closed above the 20 DMA on the BANKNIFTY, but closed below the 20 DMA on the Nifty. So it's a difference. So Nifty is showing that way bullishness. Yeah, so that is a Nifty is kind of a hammer. So, during a downtrend it is a hammer. So it could be a change in trend also possible in the upside, but it is resisting at 50 DMA on the Nifty, right? And BANKNIFTY is a spinning top, which is bearish, and it is above the 20 DMA, which is bullish. So there is a change in polarity bounce possible on the daily time frames because it's at a support, which is the previous resistance. We already seen that. Now look at the Bollinger Bands. Well, the bands are showing it's highly volatile because of the width of between the bands, and then it is the BANKNIFTY is less volatile comparatively, and it's slightly bearish Nifty because it's closed below the median and it is closed above, so it's slightly bullish BANKNIFTY, right? So that is highly volatile sideways movement overall, right? You can see that it is sideways on the Nifty, sideways on the BANKNIFTY also. Consolidation with volatility, with less volatility on BANKNIFTY and higher volatility, and more bullishness because of the median, close above the median on the BANKNIFTY. Support resistance level, support is 17,350, 17,400 levels. The first support, so that is gone. 7,200 to 7,300, that is gone. Then 70,000 levels is support, that is gone. Then 16,800 to 16,900, Fibonacci 38% level is for the major support is coming downside. Then similarly on the upside resistance, 17,500 7600 is Fibonacci 23 retracement, so that's kind of major resistance on the upside. And then 17,800 to 17,850, then above that it's 18,000 levels, and above that 18,100 200 level goes. So that's the bottom resistance on the Nifty. Similarly BANKNIFTY support region is 38,500 levels. If that is breached, then 38,000, then it's breached, then 37,800, then that is breached, then 37,400, then it's Fibonacci retracement levels. Right, so if that is gone, then you come back to the 36,900 to 37,000 levels, and then you have the 36,700, which is Fibonacci 38 retracement levels. Similarly, the resistance upside would be 39,000, and then above that 39,500, right? And then above that we have 40,000 kind of levels. So that's the resistances and supports in the BANKNIFTY that you see. So any close above this 39,500 levels would mean that there is a new higher high formation that can happen, right? And anything that is closing below the 37,300 levels could be trouble for the indices in the banks. Similarly, any close above this 17,800 levels, or even a close above the 17,500 level also can be another higher high formation, and any close below 17,000 would be a lower low formation, which is kind of bearish nature. Any close below 16,800 level would clearly indicate bearishness in the short term. Now, coming to the momentum and the trend analysis, momentum continues to be sideways on the short term and the medium term. And if you also, momentum continues to be sideways short term and medium term, right? So there is a bearish divergence that is in play. That's something that we have to see. See the sideways momentum of the Nifty, right side Bank Nifty, sideways momentum, and it is resisting on the RSI 60. So that is kind of making it even more bearish, from the momentum perspective. And there is a bearish divergence, right? Momentum is coming down and the price is moving up. So that's kind of, that is in play, and you can take it to 38, 30, definitely 38,000 kind of, at least till this 38,000 you can definitely take. And also there is a potential that you can take to 37,400 kind of level, Fibonacci 23 retracement level also. So there is a bearish divergence on the momentum on Bank Nifty, and but even on the short term and medium term, it is sideways momentum. So momentum wise, it's sideways in all, with the divergence making it a little bearish on the Bank Nifty. Trend wise, how is it? Trend wise, Bank Nifty is having positive, DMA positive, and it is bullish. With strength is not, strength is dipping. That means it can cross over back to the bearish ones anytime. But Nifty clearly it is remaining the bearishness, but not much strength. That's a short term, right? So that's a trend for the Bank Nifty and Nifty. Now coming to the volatility and opportunities analysis. So what happened last week was a flattish close on the India VIX, with just 1% of down, 1% below the previous. That's 18.68 is what it closed at. But remember, this flattish close on the India VIX last week happened after almost 11% and more on the upside and 11% and more on the downside moves in the India VIX. That means the India VIX was highly volatile last week, even though the closing was flat, right? So high volatility is clearly evident from the not from the closure of the but the if you look at the daily movement that happened, there is big volatility spike that that makes it very hard to trade for a trend following, especially, right? Now, right now it is cooled off below 20. That is good, but anytime it again spikes back above 20 is not going to be something that is easy to trade, right? It makes it even more difficult. So you have to be cautious on that whenever it spikes up above 20. And over to setup, you see it's a short build that happened in Nifty and Bank Nifty. It is long and winding. Long winding is kind of bearish. People who are long are now thinking of going short, right? So overall there is bearishness in both the indices as per the open interest. How the option sellers have placed their bets, right? Now, open interest analysis for the February 17, we can see in the next slide. 17 weekly expiry is what we want to add. So the put call ratio is showing that it is 0.81 for Nifty and 0.79 for the Bank Nifty. So that's kind of not enough bullish, you would say, right? So this is what the charts are showing. See, right? So this is a chart on the left. What you see is Nifty, and right comes Bank Nifty. So overall, if you see, the range is between 17,000 and 18,000. That's the broad range. So the option writers are thinking that it can be volatile to that extent. That much of volatility is possible. 17,000 highest put rating, 18,000 highest call rating. 16,500 also has got higher number of and the next higher number of put rating, and then 17,500 is where the national level of call rating is seen. So put call ratio we already seen 8:1 is not that bullish. Short build up is what in the open interest last build up is showing. Bank Nifty, the range is 38,500 and 40,000. That is also 1,500 points of range is what the market is looking forward for the February 17th expiry. So 38,000 also has got good put rating, and 40,000 also has got good enough of the second highest call rating that you can see, right? 0.79 is not that bullish enough. Long binding is kind of bearish. Build up on the open interest data. That's what the open interest data is showing. Slightly dominating is the call resistance is what is dominating. Obviously the charts are saying that this is also the same, but the range, you can see that correlate these levels of 17,000 and 18,000 along with what we have seen in the support and resistance levels previous slides, right? So then you will get to know exactly the potential exit and entry price points, right? Now coming to the sectoral watch, we have the charts of the sectors here. So in a nutshell, last week IT sector lost, 2%. Metals closed 0.5% down. Auto sector was flat. Pharma sector was 0.5% down. FMCG lost big 2.5%. Realty also closed big 2.5%. So overall there was bearishness. There was all the sectors across the sector fall happened, and look at the bullishness. The bullishness was seen only in the metal. That only the short term, not in the week term. So stocks could be picked up on those metal sector with caution, and only for swing trades it can be, because momentum in the weekly is still sideways. But other sectors, IT, auto, pharma, FMCG, realty, all have momentum in the sideways. We just have to wait for the momentum to pick up before we can go for a sectoral approach for picking the stocks. Right? So you can, these are the charts that you see. IT sector, you can see that it is kind of consolidating. Right, it closed weekly basis bearish down. Right, auto sector, you can see it's kind of consolidating. Right, but it's on the edge of getting the bullish zones, but not exactly, because there is a 2017 big resistance there on the upside. Only if that breaks out, we can say there is bullishness. And metal clear consolidation breakout is happening. Whether it's sustained or not, we'll have to see on the weekly basis. Right, and FMCG, you can see that there is again a big fall. 2% happened last time, but it is momentum sideways on the medium term and short term. And pharma also, it's sideways momentum, and it is a kind of consolidation. Reality was breaking out. Now it is kind of dipping back to the place where it broke out. Looks like, right? So it is a red close on a weekly basis. Momentum is sideways. So that's exactly what we just want to use. Now we pick up this heavyweights. You can see that the some bullishness was last week happened in the last 2 weeks. It happened in the HDFC Bank. Is index heavyweight. So you can see that there is a big wide range bullish candles there. After that, it gave up a little bit and went down to 14,440 kind of levels, and then it bounced up. So weak size shows that the bulls are there present to buy, right? Right. So this is kind of a kind of similar to a hammer, you can say, and it indicates that there is a potential that although the momentum is less, there is a potential that on the medium basis, HDFC Bank can move up, but there is a big resistance here in the 1545 kind of levels. That's something you have to keep low. So going above that is going to be a tough job. Market moves up, then or HDFC also will move up, or HDFC moves, market also moves. So either both holds good. Now HDFC, if you see again, so it's not that bullish, it's bearish. Right, bearish close is what you see here. Momentum is dipping to the bearish zones. Reliance Industries kind of sideways, and last week had a green close. Infosys, if you see, it's kind of consolidating. A gravestone doji, severe indecisiveness and slight bearish is also there. Right, after a big fall from the top that happened for the 3 weeks before, along with the US market fall. So that's what you see on the TCS. So net trend line channel on a weekly basis, but it is a bearish. It's coming towards the channel edge. So whether it will break this edge and fall back to this previous major breakout support zone, we'll have to see. Momentum is sideways and resisting it. So there is bearishness around the IT, and this is also showing that, and it's on the edge of the trend line. HDFC Bank also is kind of bullish on kind of bullish, very close to the bullish on weekly medium basis, but there is a close with bearishness. The close of the candle shows some bearishness. Kodak also has a bearish candle close, momentum sideways. Right, so that's what index is. So in short, HDFC showing great strength. Reliance also showing some strength. Right, last week, although the momentum for both are sideways. Others are all kind of consolidating. ICICI also having strength. ICICI Bank, HDFC Bank, and Reliance are not that down and out. It is, you can say, sideways with some green closes on a weekly basis. If you see there, now institutional participation, if you see, FIS all 5,650 crores, and DA is what 3,550 crores. So institutional buying non-stop. You can see already here with a small buying that happened on the Friday. And the interesting thing last week is that domestic institution also has started selling. Look at this big heavy selling that happened on Feb 7th, right? Which is worrisome. And net longs on the derivatives has also moved up slightly. Right? Now, coming to the global market, the US markets fell 1 to 2.5%. If you take the first, the major three: Dow Jones, S&P 500, Nasdaq. Right? It is a fall around 1 to 1 to 3, almost 2.7, 1 to 3% of big fall happened last. It is facing severe resistance and it's forming inverted hammers. That shows the resistance, the pressure. Right, this is the US charts. Dow Jones, if you see, it's a famous support zone, major support zone. Right, what you see here, it has been tested multiple times and it has bounced up from there. Now it had made bounce of 2 weeks and then third week not sustained. It has formed an inverted hammer during an uptrend would indicate a downtrend. Could indicate potentially. Now momentum is sideways, not at bearish. So this holding this up, whether it will come and hit back and consolidate this area or would it break this area down is what we have to keep a watch. Same with the S&P 500 also. A trend line edge, inverted hammer, inverted. So all the three major indices, S&P 500, Nasdaq and Dow Jones also showing inverted hammer and on a trend line edge. If it will break it down below that is something that you have to see. Crude oil is another concern, big concern. Crude oil is shooting up and is 92.1 kind of levels, and momentum, volume, trend, everything is in favor of the crude oil, and it is going up towards, looks like it will further go up to meet the channel top. So this is a weekly chart, remember that. So this is a real worry for our economy. Now gold, very interesting. Gold is trying to break out and almost broken out, and there is a immediate resistance in the 19,000 to 18,076, that range. If that's broken out, that could clearly indicate that probably the equity market is also going to a bearish cycle on the short term, if that is happening. But remember that it had attempted to do that multiple times in the last 2 years, and every time it attempted, it gets stuck at this resistance zone and then comes back to whether it will happen. Next week will say whether this is going to happen or not. So there is a indirect relationship between this gold, crude, and the dollar, right? So that is something that we have to keep a close watch on, right? So if gold is really breaking out of the support zones and going above 19,000 kind of levels, means there is a chance that our markets can also fall. And similarly, crude going up is not good for the market, and it will impact the market and pull it to the bearishness. Now there is some, see, last week also it is a green, the dollar is strengthened on the dollar index, if you see on the downside down, and if you look at the USD INR, we can see that it is trying to break out of this resistance zone of 75.5 levels, right? It is doing that right now. Whether this channel top above it here at the 76 levels and above will hold it or will bring it back down or not, you never know. So basically rupee has weakened, crude has shot up, gold is breaking out, and US markets are faces 1 to 2% of resistance from the top. So this is, there is some bearishness smell seriously seen there in the market as per the charts technically. Now to stop is Lawrence Lab. This is a positional bet. There is a volatility divergence. That means it's an inside and outside Bollinger Band formation that's happening, which is a W pattern which can break out at least to the 700 kind of levels. That's maybe slow, sideways, momentum is sideways in the weekly, volumes are good. So only if that, so eventually the momentum also is catch up. That's the right time to take the trade. Now the close has happened above the 20 moving hour average also. Trend crossover is happening to the bullish zones. So this may be the right time probably to take a swing trade or a position trade. Okay. Second one is Gujarat Narmada Valley, which is breaking out of the previous very long time resistance with momentum, super volume, and trend rising strength. So Gujarat Narmada Valley and Lawrence Labs, so 2 picks for the next week. Now index positional trades, if you see on Nifty, this is a double diagonal calendar spread with 80% POP. Probability of profit is very good. Risk reward is also is okay, with as long as you are booking the profit in 2-3% of profit, and break evens are only if it breaches the 16,750 and 60 and 17,750. So because of high volatility, this may benefit. It is not exactly in the neutral, slightly far away from the neutral. So yeah, that gives a very reasonable range, right? In 1 week time, that to 4 days time, on Friday is already over, so it's not going to break the 17,750 or 16,750 levels, right? So 1,000 point range you are getting, so and good probability of profit is there, and as long as you don't keep it for the last day of expiry, this weekly expiry, Nifty option strategy can work out. Now to wrap up, there is moderate bearishness what the charts are saying. The momentum, the trend, right? The chart patterns, support resistance levels, all of this is saying that there is moderate bearishness. Along with that, the US markets, the global cues, if you see, you will go. That is also another reason why the bearishness has been put as moderate. Right? Because there is stiff resistance in the US markets. You can see inverted hammers all across the indices. We have seen that inflation, Fed, interest rate hike. Along with that, global Russia-Ukraine crisis also happening. So, so there is fear across the market. Can be very volatile. People are worried about the money will be going out of the market and all this. This market can be volatile, slightly bearish. Another reason is crude oil and the rupee both weakening. Crude oil, rupee weakening, gold trying to break out if it happens. So all this is giving some global cues. Crude oil, rupee weakening. All of this collectively gives a feel of a moderate bearishness. But markets behave in its own way, so you never know. Right, but this is what the charts are saying for the time being. Now, positive factors, if you see, change in polarity support levels right now, both indices are, which is good. Bollinger Bands are showing not bearishness, but it's consolidation that it's saying. Index has cooled off a little bit, right? And below the 20 levels, it is there. Right? So, also 17,000, if it is breached, then it could be another lower low. And it is say greater than 18,350 levels, it may be another high formation that could potentially happen. And anything between that is consolidation that's happening. So we have to watch out these two levels before we go for positional long series. Overnight risk always has to be hedged, and vertical spreads or calendar spreads or to make benefit of the volatility has to be the use, or non-directional strategies also can be used, because market is sideways, that is for sure, but it is going up and down. It is highly volatile, as per what the Bollinger Bands are saying. So always take precautions with hedges and tight stop loss for intraday, right? So that's my view, moderate bearishness in the market. So I hope this helps you to frame your view for the market view for the next week, and also frame your trade plan for the next week. Hope it helps. If it helps in any way, consider hitting the like button and then share it to maximum number of friends, colleagues, everyone you know. We have very few subscriptions, and your help in this regard would be highly appreciated. Thanks for watching. Happy trading and happy learning. Bye.